Hello, listeners. Welcome to the Pre-Market Update. The podcast is powered by AI. I am Joe.
And I'm Sarah. Today is February 17th, 2026. Let's dive in.
Market overview. We're looking at a bit of a tug-of-war in Indian markets this morning. Yesterday, we saw a fantastic rebound with the Sensex surging 650 points to close above 83,200, and the Nifty 50 climbing over 200 points to settle near 25,682. This snapped a three-session losing streak, largely driven by a broad-based rally in financials, energy, and healthcare. PSU banks were the stars of the show, and we saw significant wealth creation. Investors got richer by about 3 lakh crore in a single day. However, don't get too comfortable just yet. The GIFT Nifty is currently signaling a cautious, if not negative, start for today's session. It's trading around the 25,637 level, which is nearly an 80-point discount from the Nifty Futures' previous close. On the F&O front, we're seeing some interesting cues. While the market rose yesterday, foreign institutional investors, or FIIs, have remained net sellers so far in February, offloading about 1,374 crore rupees. This selling pressure is mostly concentrated in the IT sector, which is grappling with some AI-related volatility. So, while the momentum for Monday was strong, the early morning indicators suggest we might see some profit booking or a cautious opening as traders weigh global cues.
International markets. That cautious tone Joe mentioned is definitely echoing across global screens. Starting in the US, Nasdaq futures are showing a decline as traders prepare for Wall Street to reopen after the Monday holiday. There's a bit of a wait-and-see approach happening as everyone anticipates the upcoming Fed minutes and US GDP data later this week. Meanwhile, over in Europe, the Stoxx 600 actually managed to close slightly higher yesterday, buoyed by financial stocks, though investors are closely watching the outcomes of the Munich Security Conference for any geopolitical shifts. In Asia, it's a very thin trading environment because of the Lunar New Year. Major hubs like Shanghai and Shenzhen are closed all week, and the Nikkei is also observing a holiday today. For those markets that are open, we're seeing modest gains, but the volume just isn't there. Looking at commodities, gold has taken a bit of a hit, sliding 1% to slip further below the $5,000 mark. This is partly due to a firmer US dollar and the lack of Asian buyers during the holiday. On the flip side, crude oil prices are edging up. There's some renewed geopolitical risk in the air as Iran conducts naval exercises near a key shipping corridor right before scheduled US talks. It's a complex backdrop for the currency markets too, with the yen trimming losses and the Aussie dollar dipping after the latest RBI minutes.
Business story. India. Back home, the big story everyone is talking about is the RBI's sweeping new norms regarding collateral and funding. This is a massive overhaul that's set to reshape how our markets function. It's specifically hitting proprietary traders and exchanges. We saw shares of BSE, MCX, and brokers like Angel One and Grow tumble yesterday, because these rules are expected to raise costs significantly and potentially squeeze liquidity. If you're a retail broker, you might be spared the worst of it, but for the big prop desks, the game is changing. In the corporate world, we're seeing a real divergence. On one hand, you have the AI scare hitting IT stocks. Nearly $56 billion in market value has been tested recently. But there's a silver lining. The current earnings season might be a lifeline. Growth is finally starting to broaden beyond just a few sectors. For individual movers, keep an eye on Ola Electric and First Cry. Both saw their stocks tumble yesterday following weak earnings reports. Conversely, Engineers India and Ease My Trip are showing strong momentum. Also, keep an eye on the horizon. Sam Altman and Sundar Pichai are headed to India for a major AI summit. This highlights India's position as a critical talent pool for the next phase of AI development, which could flip the narrative for our domestic tech giants.
Business story international. Moving to the international corporate scene, BHP Group has some impressive numbers out. Their first-half earnings jumped by more than 20%. What's interesting here is that their aggressive push into copper production is finally paying off. High copper prices are successfully offsetting the sluggishness they're seeing in their China-focused iron ore business. It's a classic case of diversification saving the bottom line. In the US tech space, the narrative is shifting from AI potential to AI performance. Giants like Microsoft, Amazon, and Nvidia have actually seen billions shaved off their valuations recently as investors pivot. The market is now prioritizing near-term earnings over long-term AI ambitions. In contrast, companies like TSMC and Samsung are actually seeing value increases as the hardware side of the AI trade stays resilient. We also have a bit of a shakeup at Hyatt, with Chairman Pritzker leaving the board over ties to the Epstein case, which is catching some headlines. And finally, in the AI world, Sam Altman announced that the creator of the popular open-source agent OpenClaw is joining OpenAI. It's a clear signal that the race for AI agents is intensifying, even as the big-cap stocks feel the heat of high expectations.
Economics and geopolitics. On the macro front, the focus remains squarely on the central banks. While we wait for the Fed minutes, the consensus seems to be that interest rate cuts are still on the horizon, which is providing a floor for riskier assets in emerging markets. Here in India, the synergy between the recent union budget and the US-India trade deal is providing some structural support to the Nifty, even if FIIs are being tactical with their exits. Geopolitically, the euro area finance chiefs are making a coordinated push to expand the euro's global role. They're essentially looking to capitalize on the fluctuations of the US dollar and the trade uncertainties brought about by the Trump administration. Also, watch the UK market. Goldman Sachs is predicting that gilts will rally through 2026 as the Bank of England prepares to cut rates. The overarching theme right now is a transition from high inflation fears to a focus on growth stability. But with the Iran naval exercises, the energy supply chain remains a wild card that could spike inflation at any moment.
Key takeaways to wrap things up for our investors this morning. First, prepare for a soft opening in India despite yesterday's gains, as the gift Nifty is signaling some early pressure. Second, the RBI's new collateral norms are a fundamental shift. If you're invested in exchanges or high-frequency trading platforms, pay close attention to the earnings impact. Third, the AI scare in IT might be overdone, and the upcoming AI summit with global tech CEOs in India could provide the sentiment boost the sector needs. Fourth, commodities are in a flux. Gold is correcting, but oil is sensitive to those Middle East naval drills. And finally, keep an eye on the US market reopening later today. Their reaction to the holiday break will likely set the tone for our midweek session. It's a day for cautious optimism and selective stock picking.
That wraps from today's update. I hope you gained useful insights.
Add your thoughts and comments and follow for more such updates. This is Sarah
And Joe, signing off.